What's up, everybody? This is Networkchain. Hope this finds you doing well. Lots of interesting stories that have come out of the Bitcoin universe over the past week. Let's go ahead and go over the cryptocurrency market update. As you can see, Bitcoin down 3.5% over the past 7 days, currently trading at around $66,492. We'll see if we continue to have more downside pressure going into this week, given what's happening overseas in the Middle East and the conflict. And we are seeing not only a drop in Bitcoin, of course, other cryptocurrencies, but we're also seeing other markets being rocked as well. So we shall see what happens over the next several days, if we continue to see more downside or if we get some news that could be positively reacted to. But obviously, time will tell. We'll keep you posted on that. Ethereum currently trading at 2,000. It did dip below 2,000 last week. It's currently trading just about 4% down from the past 7 days. We have XRP down 5%. You have Solana almost down 6%. Dogecoin, the largest meme coin of them all, is about flat. It's still at around 9 cents. Then you have Hyperliquid now in the top 10, currently trading at $39. So if we take a closer look at Bitcoin, you can see here that as we close in on the month of March, if we close below 66.9, somewhere around there, then this will be the 6th consecutive month of downside for Bitcoin. The last time that happened, as you can see here, was in 2018, and that was from August all the way until January of 2019, and that was 6 consecutive months. So we have potentially 6 consecutive months, and we've never had 7. So we are looking to see Bitcoin make any type of bounce going into April this week, but obviously we shall see what the next 32 days or so brings us. But as of right now, we're definitely looking like we could potentially have a negative month at the end of March. So we're going to continue to keep obviously an eye out for this bear market. This is not likely because of the fact that we are a couple of years past the halving. We're in 2026. So if we went by the 4-year cycle, which it seems as if we're still going through this 4-year cycle phase, 2026 is going to be a volatile year, but obviously we still have 9 months to go to see what happens with Bitcoin and all the other macroeconomic factors that could affect what happens to Bitcoin and the cryptocurrency market. One of the biggest news stories that came out of Bitcoin and crypto over the past week is that Fannie Mae, which is a U.S. government-backed mortgage company, they are accepting first crypto-backed mortgage products. So you can see here Fannie Mae, from the key points, will accept crypto-backed mortgages via a new product by Better Home and Finance in partnership with Coinbase. The borrower would take out 2 loans, the second to fund the down payment on the first. So obviously, if someone is interested in this product, you want to make sure you do your deep research to have an understanding of what this product offers, because you would be taking out 2 loans, meaning that you would be having interest on 2 loans, and you're basically taking out a loan for the down payment as well as a loan for the main mortgage for the home. But the advantage of having Bitcoin is, given its track record over a longer time frame, Bitcoin's only been around for 17 years, but if you have a 30-year mortgage, and now they're talking about potentially having a 50-year mortgage over that time frame, if you use Bitcoin as the collateral over time, that Bitcoin actually will probably go up in value quicker than the amount of money that you will owe on the loan. So a lot of people may be very interested in this particular product. You can see the borrower will need to have a Coinbase account, and once the cryptocurrency is put up as collateral, it cannot be traded. So basically be locked up during the term of the loan, or whenever you are able to pay off the loan, then I believe your crypto then would be released back to you. Fannie Mae will now accept the crypto-backed mortgages via the product from Better Home and Coinbase. And as you can see here, the CEO of Better says that we have now finally created the infrastructure rails to enable any tokenized asset in America to be able to be pledged to help someone afford to buy a home. So the key words there are tokenized assets. So we know blockchain technology, which is the foundation of Bitcoin and several other cryptocurrencies. We know that over time, more and more assets will be so-called tokenized using the blockchain. And with that, it'll then have give consumers the opportunity to use different types of assets to put up for collateral. So you can see here it starts with Bitcoin, starts with USDC. So it's not just Bitcoin, it's going to be USDC as well. But going forward, it can be Apple stock or Amazon stock or any publicly traded mutual fund, bond fund, something that you might hold in your IRA. You're going to be able to pledge that to buy a home, because we know that as the average priced home and median priced home in the United States particularly continue to balloon and get more and more expensive, people who have assets like equities, cryptocurrencies, and mutual funds, for example, can use and take advantage of these assets that do continue to grow over time, would be able to use these assets as collateral to be able to help them buy a home. Because right now, if you're just trying to save in fiat currency, it would be extremely difficult, because of the fact with inflation not only happening with a lot of other aspects of our life. Obviously, when it comes to buying a home, we're seeing that inflation balloon continuously over time. So it's becoming harder and harder for the average American to be able to buy a home. So these token-backed mortgages are a major step in unlocking home ownership for the younger generations that have struggled with barriers to saving for a traditional down payment. So because it can be very expensive to be able to put down a down payment, for example, if you buy an average price home in the United States is around, I will say around $500,000 right now. Median price is just around 400, somewhere around there. But you usually have to put about 20% down for a down payment for a home. So let's say you're buying a home that's $500,000. You would need to be able to put down at least $100,000. So this would enable you to put Bitcoin or USDC, and they're talking about potentially other cryptocurrencies down the line, being able to put up as collateral. And if you have, say, $250,000 worth of Bitcoin that you've been collecting over these last several years, time over time, then you would be able to put that up as collateral, that Bitcoin up as collateral, to use for that $100,000 down payment. But it is taking a loan for the down payment. Usually people have the funds to be able to put down a down payment and then take out a mortgage on the remainder. So definitely, as I mentioned earlier, that you do your research before getting into any type of mortgage, any type of loan, particularly when it comes to these big crypto-backed loans, and have a full understanding of what the interest rates are going to be and what the parameters are going to be with regards to being able to have your crypto returned back to you after you are able to pay off your mortgage and buy your home. But you can see here that over time, the U.S. average home price over Bitcoin, you can see that it gets cheaper and cheaper in Bitcoin terms to buy a home over time. So back in 2011, it took over 77,000 Bitcoin to buy the average price home. In 2015, it took 1,500 Bitcoin. In 2020, it took 60. In 2024, it took a little over 7 Bitcoin. So we're seeing over the years, it gets cheaper in Bitcoin terms. So a lot of people who have continuously bought Bitcoin over time are finding that their Bitcoin will be able to buy them a home. And as we go further, if we continue to have the same trajectory that Bitcoin has been on over the last 17 years, then soon it'll be 1 Bitcoin to buy a home, or maybe even 0.5 Bitcoin. So that's why we're trying to find ways here at Networkchain to be able to store purchasing power and increase value via other assets outside of fiat currencies, because we know that it continues to get inflated. If you watch our video from last week, we talk about the U.S. debt and how the U.S. government and governments around the world are able to print money to basically inflate that fiat currency to be able to handle their debts and other issues that are going around in the country. So just make sure to keep the mindset of having an understanding of increasing your purchasing power. It's not necessarily how much money you have in the bank, but it's about what can you do with the assets, with the purchasing power that you hold, with the assets that you hold. So definitely something to keep in consideration. And as we close out, we can see that Bitcoin is not going anywhere. We're seeing that a lot of the major institutions, a lot of the major banks, central banks, governments around the world are holding Bitcoin or finding ways to get a piece of the pie. You can see Morgan Stanley. They have now released that their Bitcoin fund, their ETF that's going to be making out to the market, is only going to be 14 basis points. So basically 0.14% is going to be the fee. And they're basically undercutting all the other Bitcoin ETFs that are out on the market. The lowest currently on the market is through Grayscale. And then we have others that are around 21 basis points. And so we're seeing that there's going to be a lot of competition, which is a good thing when it comes to these Bitcoin ETFs. So you'll have more and more options if you want to have a Bitcoin wrapper as opposed to having full self-custody of Bitcoin yourself. Of course, Strategy, the largest corporate holder in the world with over 760,000 Bitcoin on their balance sheet, they don't have enough. Apparently, they want to continue to get more Bitcoin, continue to stack. You can see they just announced last week that they are going to have a 21 plus 21 billion plan, basically raising another $42 billion through their stretch perpetual dividend product, as well as their common stock, to continue to add Bitcoin to the balance sheet and add Bitcoin per share for MSTR holders. So there's constant demand. It basically looks like perpetual demand that's coming into Bitcoin from MicroStrategy. Then we see, companies like BlackRock and Morgan Stanley, Fidelity, all of these major asset managers who are offering these type of products to the masses. A lot of institutions can only buy Bitcoin via these ETFs. So Bitcoin isn't going anywhere. You can see here from our Instagram account, here's a snapshot of the Bloomberg terminal and what the Bitcoin ETFs have been doing year to date. Now, this was before the latest drop towards the end of last week, but you can see that they were nearing even despite the volatility in Bitcoin. And you can see IBIT, which is BlackRock's ETF offering, they are positive year to date by over $1 billion. And this was earlier last week. So definitely something to consider when it comes to what's happening in all of the markets. Despite the volatility, Bitcoin continues to chug along, and we're seeing that more products are being offered for consumers to be able to use Bitcoin as a traditional financial product. And so obviously we'll continue to keep you posted, not only here weekly on YouTube, but as well as on Instagram and X. So we really appreciate you watching. Thank you so much. If you have any feedback for us, we really appreciate it. If there's anything that you want us to cover, we'd love to hear what you have to say. In the meantime, we look forward to linking up with you soon on the Networkchain. Take care. Bye-bye.